All right, so check it out, folks. People always ask me, is life insurance for me? Or the real question is, should everybody own life insurance? I don't know the answer to that because it really comes down to health. It comes down to all these other different risks. But here's what we're going to talk about today, the three drawbacks of life insurance. Is this the right strategy for you? Because I want to dig deeper and deeper into how to use it as a Swiss Army knife, how to use it as an estate planning tool possibly, but most importantly, how to use it as a turbocharger to all the other assets that you have. So stay tuned. There's going to be a bonus at the end. So it's always about empowering questions. And I always like to say our brain is like Google. If we ask questions like, hey, why do I keep messing up? It'll go over your whole life and showing you why you're messing up. And the same thing if you want to be able to advance and really crush fear by embracing and owning the right questions. What can I learn from this? How can I succeed? And those questions actually give me, whenever I say it, a leg up on what to do next. So here are some questions that I think you should ask when it comes to life insurance. Number one, is life insurance affordable for me or for you? The question becomes, what does a cash flow analysis look like in order to be able to figure that out, right? What kind of money's coming in? What kind of money's going out? If the bucket was a bucket that had water coming in, which was money, is there holes in the bucket? What do the holes look like and how can we fix that? And then the other question is, well, isn't certain insurance expensive? Now, my answer is going to be, you must be talking about term insurance. And everyone's going to say, wait a minute, what do you mean? Term insurance is inexpensive. It is until it expires, and then to keep it, it becomes even more expensive. And last but not least, what are the risks? Well, the risk is not having the right insurance. The risk to me is not having insurance that never dies, because if you have term insurance, eventually the term runs up and you don't have it anymore. So you want to be able to get insurance that never dies until the day you shuffle off this mortal coil. And if you can understand these three questions, which we can make very clear for you, you'll be able to put yourself in a position to make the right decision moving forward. Number one, higher initial cost. The initial cost of some life insurance policies, especially whole life, feels pricey compared to other financial avenues. Think term insurance. You're essentially transferring cash from one pocket to another. You're paying more now to get benefits that'll pay out over the long run. But also remember, even when you're paying for it now, you could use that money during your wealth accumulation phase. What is that? Basically between age 25 and 65. You don't have to put the money in jail where you can't access it. Yes, you may feel a little pain up front with the cost, but keep in mind, if you understand leverage, liquidity, control, and how to overfund, you'll be amazed how that cost gets minimized and the turbocharging has begun. Number two, complex products. Let's talk about that. Life insurance policies are complex long-term commitments. Yes, they can include terms and clauses that make you feel like you've been trapped in an expensive money hole. Misunderstood. Understanding the subtle difference between policies is essential, which is why you need an expert that could sit down and take you through every single part of what you can and cannot do from beginning to end. Now remember, understand each product. Understand term, understand whole life, understand index universal life. Because if you understand all three, you could ask yourself a better question to come up with a better decision. Flexibility and guarantees are the key as you move forward in this space. Number three, long-term commitment. Life insurance policies require time and patience. Of course, there are ways to juice up your policy in the short term, which is what we specialize in. Overfund it right in the beginning and you can sustain itself for decades, but the optimal results will take time. So let's talk about what it looks like over long-term and short-term. When I say short-term, and I mean like if you're paying $1,000 a month in a traditional policy and you do that for 20, 30 years, that's long-term, that competes with the IRA and a 401k. But remember, each year you could overfund it. So let's say year one, you're doing $1,000 a month and you're dumping $100,000 2 weeks later after the first payment. You could access 85 of that 100 within 20 days and put that to work somewhere else for you. That somewhere else could be earning a rate of return from cash flow, mortgage interest write-off, depreciation, if it's in real estate. Or you could buy a business with that that's going to give you revenues. There's so many things you could do outside of the policy by leveraging the cash value in the policy, especially the overfunded piece that you do right away. Stay tuned for more because we want to be able to share with you how you could do this personally. It'll take more time, but at the end, we'll share the bonus strategy. Another word of caution, if you're financially wobbling, trying to balance high interest debts or living paycheck to paycheck, then hold off and prioritize. Put out those immediate fires before turning up the heat with life insurance. So check this, folks. Get on an automated debt reduction plan, whatever that looks like. If you have credit card debt that's, I don't know, let's say it's $1,000 a month, but you could save $1,500 a month, maybe take half of that $1,500, put that over here, and automatically reduce that debt, but definitely save the other $750 into another bucket. You want to be able to do two at the same time, not one or the other. You don't have to pay it all off before you start putting money away for yourself. You could do two at the same time. Even if it takes a little longer, that cash value that's being built up is in your favor, or that savings account is in your favor for if some other opportunities come your way. So for all you new folks out there staying with us here, thank you so much. Don't forget to continue to follow, subscribe, and share. Here it is. If you have cash and if you have debt, let us show you here at Epic, no obligation, on how to do both at the same time. Let us take you through the Epic Financial Freedom Map, and none of this costs you any money. Once again, there's no obligation. Go ahead, click the link below. Book an appointment with one of the team members. They know their job is to educate, but also answer any questions and give you a map on how to set you financially free. Thanks for checking us out.